Welcome to official video overview for the initial public offer of Punjab Carbonic Limited. With over 3 decades of operating history, we are an integrated carbon capture and utilization and industrial gas solutions company engaged in the manufacturing, recovery, supply and distribution of liquid carbon dioxide and dry ice, including the design and execution of CO2 recovery and refining infrastructure. In addition, we have also commenced fuel-grade ethanol manufacturing through our subsidiary Punjab Greenfuels Private Limited. This video is directed at and is intended for distribution to and use by residents of India only. The information in this video is not for publication in or into the United States. No part of the contents of this video shall be copied or duplicated in any form by any means or redistributed. You are viewing this video on the basis that you have confirmed your representation, agreement and acknowledgement to the book running lead manager and the company that 1. You are the intended recipient of this video and 2. You are located in India. If you are not permitted to view this video or are in any doubt as to whether you are permitted to view this video, please exit this video. This video provides only the salient features of the offer, and accordingly, potential investors should not rely on this video for making an investment decision. Any potential investor should note that investment in equity shares involves a high degree of risk, and for details relating to such risks, see the section titled Risk Factors beginning on page 25 of the draft Red Herring Prospectus. The company, promoters and BRLM and their respective affiliates, directors, officers, agents, representatives, advisors and employees do not accept any liability whatsoever, direct or indirect, that may arise from the use of the information contained in this video. Caution: investors are advised not to rely on any other document, content or information provided in respect of the public offer on the internet, /online websites, /social media platforms, /microblogging platforms by finfluencers. Investors are advised to rely only on the information contained in the offer document and price band advertisement for making investment decisions. Initial public offer of Punjab Carbonic Limited. Investors are advised to read the DRHP dated March 31st, 2026. The total offer consists of up to 95 lakh equity shares of face value of rupees 10 each, comprising of a fresh issue of up to 60 lakh equity shares of face value of rupees 10 each, and an offer for sale of up to 35 lakh equity shares of face value of rupees 10 each. The offer may include pre-IPO placement up to 20% of the fresh issue size. For further details, see the offer and offer structure, beginning on pages 82 and 480 respectively. About the company. Punjab Carbonic Limited was incorporated on December 28, 1992 and has its registered office at Village Lehri, Talwandi Sabo, Bathinda, Punjab, India 151302. The corporate office of our company is at 1897 Arya Samaj Chowk, Bathinda 151001, Punjab, India. With over 3 decades of operational history, we are an integrated carbon capture and utilization and industrial gas solutions company. We, along with our wholly owned subsidiary Punjab Fusion Private Limited, are engaged in the production, supply and distribution of CO2 and dry ice, along with the supply and setting up of CO2 recovery unit within distilleries. We produce high-purity liquid CO2, meeting the International Society for Beverage Technologists standards. With an annual installed capacity of 2,59,200 metric ton as of March 31, 2025, we cater to a wide range of industries, including food and beverages, automobiles, chemicals and fertilizers, healthcare and pharma and aviation, with established presence across North, South, West and Central India. In addition, we have also commenced manufacturing and sale of fuel-grade ethanol through our subsidiary Punjab Greenfuels Private Limited. As on the date of this draft Red Herring Prospectus, we operate a total of 17 CO2 recovery units across India, of which 9 units are operated under the Build-Own-Operate model, wherein the CRUs are built, owned and operated by our company, with full capital expenditure and operational responsibility assumed by us. And 8 units are operated under an asset-light model, wherein CRUs are installed, operated and maintained by our company without ownership of the underlying assets. Additionally, 14 of these 17 CRUs are operated by our company, while the remaining 3 units are operated by our subsidiary Punjab Fusion Private Limited. Company's principal competitive strengths include 1. Long-standing customer relations with established domestic clientele. 2. Extensive and diverse customer base across multiple industries. 3. Strong geographical presence and extensive logistic infrastructure. 4. Integrated operating model covering the complete CO2 chain. 5. Proven engineering and technical capabilities enabling execution of complex projects. 6. Strong financial performance and healthy balance sheet. And 7. Experienced promoters and management team having domain knowledge. Investors to note key strategies to grow the company's business are: 1. Expand our geographical network of CRUs and targeting additional end-use industries. 2. Expand our fleet of tankers to streamline our business operations. 3. Capitalize on favorable industry tailwinds, supporting growth in ethanol blended fuel consumption. 4. Capitalize on favorable industry tailwinds, supporting growth in increased CO2 consumption. Employees. As on September 30th, 2025, our company had 273 full-time employees, excluding our executive directors. Risk factors. Investors should note the following important risks. 1. We are significantly dependent on our top 10 customers. We derived 78.31%, 71.20%, 44.00%, and 42.86% of our revenue from operations during the 6-month period ended September 30, 2025, and fiscals 2025, 2024, and 2023, respectively, from our top 10 customers. Loss of such customers, a substantial reduction in purchases by such customers, or our inability to attract new customers in addition to our existing customers will have a material adverse impact on our business, results of operations, and financial condition. 2. Reliance on third-party distilleries and industrial units for sourcing. CO2, which is our primary raw material, may adversely affect our operations and financial performance. Additionally, our company does not own dedicated CO2 manufacturing facilities and relies on CO2 recovery units installed on leased premises of third parties, which exposes us to risks associated with such arrangements. 3. Our company has entered into non-binding letters of intent for the proposed CRUs to be funded from the net proceeds, along with binding lease agreements for the CRU premises. And if such arrangements do not materialize, it may affect the deployment timeline of the net proceeds and the implementation of our expansion plans. 4. Any variation in the utilization of the net proceeds would be subject to certain compliance requirements, including prior shareholders' approval. 5. We operate certain CO2 recovery units under asset-light or operational arrangements where we do not own the underlying assets, which may limit our operational control. For further information, please refer chapter titled Risk Factors of the DRHP beginning on page 25. Our promoters. The promoters of our company are Davinder Singh Kohli, Amritpal Singh Kohli, Jatinder Kaur Kohli, and Indrapal Kaur Kohli, who collectively hold 87.88% of the issued, subscribed, and paid-up equity share capital of our company. For further information, please refer chapter titled Our Promoters and Promoter Group of the DRHP beginning on page 316. Shareholding pattern of promoter. As on the date of the draft red herring prospectus, our promoters together hold 2,1,78,070 equity shares of face value of rupees 10 each, representing 87.88% of the issued, subscribed, and paid-up equity share capital of our company, on a fully diluted basis. The details of shareholding of the promoters of the company, as on date of this draft red herring prospectus, has been provided below. For further details, see our promoters and promoter group and capital structure on page 316 and 110 of the DRHP, respectively. 87.88% of the issued, subscribed, and paid-up equity share capital of our company is held by promoter selling shareholders, who are selling up to 35 lakh equity shares of face value of rupees 10 each as part of the offer for sale. For further details, see capital structure on page 110 of the DRHP. Board of Directors. As of the date of this draft red herring prospectus, our board comprises of 8 directors, of whom 2 are executive directors, 2 are non-executive directors, including 2 women non-executive directors, and 4 are independent directors. For further details, please see our management, beginning on page 298 of the DRHP. Here's a look at the organizational chart for our company's management. Financial highlights. Our operational momentum is reflected in our financial performance. Revenue from operations increasing from 11,037.78 lakhs in fiscal 2023 to rupees 48,817.39 lakhs in fiscal 2025, and further to 27,939.52 lakhs in the 6-month period ended September 30, 2025, driven by expansion in our CO2 segment and the commencement of our ethanol operations. Our profitability has also improved, with profit after tax increasing from rupees 728.43 lakhs in fiscal 2023 to rupees 2,621.44 lakhs in fiscal 2025 and rupees 2,618.52 lakhs in the 6-month period ended September 30, 2025. Our operating performance is further reflected in our EBITDA, which increased from rupees 1,296.84 lakhs in fiscal 2023 to rupees 4,823.38 lakhs in fiscal 2025, with an EBITDA of rupees 3,724.98 lakhs recorded in the 6-month period ended September 30, 2025. Investors are advised to read the DRHP, including pages beginning 84, 403 and 412 for further information on summary of financial information, other financial information, and management's discussion and analysis of financial condition and results of operations of Punjab Carbonic Limited. Summary of outstanding litigations, claims and regulatory action. A summary of outstanding litigation proceedings involving our company, directors and promoters. Group company, key managerial personnel and senior management in accordance with the SEBI ICDR regulations and the materiality policy. As of the date of the draft, red herring prospectus is disclosed below. For further detail, refer Outstanding Litigation and Material Developments on page 448 of the DRHP. Object of the offer. The net proceeds from the fresh issue are proposed to be utilized towards the following objects. 1. Setting up of 2 CO2 recovery units at Nellore, Andhra Pradesh and Peddapuram, Andhra Pradesh, having aggregate installed capacity of 120 MTPD and 90 MTPD, respectively. 2. Funding capital expenditure requirements of our company towards purchase of CO2 transportation tankers to strengthen existing logistic infrastructure for CO2 vertical. 3. Investment in our material subsidiary, Pancarbo Green Fuels Private Limited, for financing the capital expenditure requirement towards expansion of its existing facility located at village Lehri, Punjab, by increasing ethanol manufacturing capacity by 35 kiloliters per day. 4. Repayment and / or prepayment in full or part of certain outstanding borrowings availed by our company. And 5. General corporate purposes. For further details, see Objects of the Offer on page 136 of the DRHP. Offer structure. The offer is being made through the book building process, in with Regulation 6(1) of the SEBI ICDR regulations, with allotment of not more than 50% to QIB, not less than 15% to NII, and not less than 35% to the retail portion. The equity share will be listed on BSE Limited and National Stock Exchange of India Limited. Disclosure of price information of latest issues handled during last 3 financial years by the BRLM. The book running lead manager associated with the offer has handled 59 public issues in the past 3 years. None of the issues closed below the offer price on listing date. Investments in equity and equity-related securities involve a degree of risk, and investors should not invest any funds in the IPO unless they can afford to take the risk of losing their entire investment. Please read the draft red herring prospectus dated March 31, 2025, and any corrigendum or addendums thereto before taking any investment decision in the offer. For risk factors, please refer to page 25 of the DRHP. For financial information, please refer to page 403 of the DRHP. For outstanding litigation and material developments, please refer to page 448 of the DRHP. Neither the company nor the promoters nor the promoter selling shareholders are seeking an investment from you based on this video. This is a video for information purposes only and is not a promotional video and does not constitute an invitation or offer to acquire, purchase, or subscribe to the equity shares of the company. Potential investors should not rely on the draft red herring prospectus filed with SEBI and wait for the red herring prospectus to be filed in relation to the IPO for making any investment decision.